Hi, I'm Ken Poletski with Community Real Estate Group Keller Williams right here in Southeast Washington State. I'm excited to share with you the monthly market report and to give you an update on what's been going on in the real estate market in the Tri-Cities area for 2024. There's lots of factors that can influence our real estate market, and the most recent one that we've been talking about on our channels, and I hope you've subscribed below, is the interest rates, right? And supply and demand and those types of things that are affecting what's happening in 2024. The only way we can decide that is to actually take a look back, and off the slides that you're going to see, then you'll be able to tell where we were last year at this time and where we'll be going. That's where we're headed, right? And so we're looking at the 2024 snapshot, and this is as of February 1st and the beginning of this month. We put this together so we can track what we're going to be looking at in the closings and in the pricing points and all of the information that we look at for our clients here at Community Real Estate Group. So let's jump on in. So the monthly active numbers are been higher than normal, right? Last year at this time we started with 738 homes, and the year before was actually only 199. So big jump that we accumulated through inventory and the climb because the buyers pulled back because of the interest rate hike that we saw last year. Well, that means in February we're actually at 879 homes on the market, so we dropped a little bit from January. And the interesting number for us to see is that 381 of those are new construction. So that's over a third of the homes that are listed on the market today in the Tri-Cities area are new construction homes, which is great, except if the interest rates drop at all, we think that this number will change, and this inventory will be absorbed rather quickly because there's a lot of buyers on the fence. Right now the rates are down in that 6.125% to 6.5% range, and a lot different than it was in this last summer when it was in the 8% range, right? So that's a good sign. So what do we look for? Well, we look for the pricing points, right? And we're looking at where we started the year. Last year, in January of last year, we started the year at $636,000 average for new homes. The resale market was lower at $547,000 on average for a home in the Tri-Cities on active properties. So where we're at in January of this year is that the average price is $550,000. So 636 to 550 is an $80,000 price change. That's a good thing. And you'd wonder, why did that happen? Why are the builders discounting prices? Well, they haven't really discounted. What they did was they shifted their product line and put out smaller homes, right? More affordable homes, still get the nice amenities, the granites, the laminate floors, the tiled showers and things like that, but in a smaller, box, a smaller footprint, or in a smaller square footage home plan. So that's what they did to shift that. Now, looking at the total market, when you're looking at that total market, we said 547 was the average last year, and this year it's 542. So that's pretty flat, and we're going to see some slides here in a minute which will show that the stabilization of the pricing point has kind of stabilized in the total market, and new construction has been taking a little bit of a dip. The other things we're starting to look at are the active days on market, and if you've been watching our weekly reports or even the first one of this year in January's report, you saw the days on market starting to climb. Well, as realtors, we watch that for two reasons. One is we gotta predict what, give the information to our sellers and kind of give them a projection of when their home could possibly be under contract and receive an offer. The second side of that is we look at with our buyer side and go, oh, that house has been on the market longer than average. That seller might be ready to take an offer lesser than the list price. So there's a couple things we look for, and this is why that slide is on here, and it's an important slide to pay attention to. Now, if you look at some of these other slides, this is the pending. So this is the snapshot in real time. This is like what's under contract today, not what's sold in the past or what's active and it's going to be in the future, but it's what it's going on right now, right today. And so in January, we saw that climb from 251 last year to 315 homes pended to start the year out. Great. A lot of those probably closed by now. We also saw the similar numbers happen in February, which is the month we're in, right? At the beginning of the month, we check it. We're looking at how many pended properties we have that are homes that are under contract. We saw it's 375. Last year at this time was 342. It's showing a trend line. What's it starting to do? It's starting to show it's ticking up, right? And we know that we sold less homes last year than we did the year before and the year before that when the market shifted. And we know it shifted because of the interest rates going up. So the buyers pulled back and it cooled off. So now we're starting to see something else happen. And we're starting to see that the homes that are going on the market priced appropriately are getting offers and getting sold. We also saw that our inventory is starting to decline a little bit. We'll see what that does because we're still in our winter months. So usually our spring months, we'll see more inventory climb. So when we talk about the average pended property prices, I guess, would be fair to say that the new construction did the same, right? It was 624 last year. This year it's 516. So it was a significant drop, right? You know, another $80,000, $90,000 drop there compared to year-over-year trend. Now, in this month, it's actually 509 and 551, so it got a little bit closer, right? And we hope to see that plateau out and that the market will begin to absorb the prices. We don't see builders offering the same incentives that we saw last year with buy down rates and a bunch of added features and stuff. There are a few still doing that. But the interesting piece to look at on this graph is the dark color, and that is all of last year's total market. Look how that stayed within range between the mid fours, you know, 460, 470, in that range all the way through last year, right? And so that's a good steady market price. I mean, that is what we're seeing, that the homes in that price range are selling, they're closing, and it's showing an indication of what the pricing strategy could be. That doesn't mean your home couldn't be worth more or less, right? It just means that is the average of what's going on in our current market. So as we look at the pink line there, that's this year, 2024, and we're seeing that same in 446, and we're at, what does that say, 459, so we're still in that same price point. So that's something to be watching. We're going to be paying attention to that. The pended days on market is less than the actives. The actives were close to 100 days on market. Pended days are down in the 50s, right? 57, 51 for resale or type properties, and then the 40s for the new construction. And that's a lot of times that, you know, it was a paper lot or the builder put a package out there and the buyer grabbed it up because it was priced appropriately or something. So we watch it, and that's for speculation again for our builder clients to judge on how much time on market, and then our sellers as well. So numbers to look at. We look at actives, that's a future kind of forecast. We look at pended properties, that's the real-time data. And then to look at what we've gone, where we've been, and then to kind of project forward or forecast forward, we look at solds. And we don't have enough data in the year yet to determine anything, but we do know the pendings have been climbing. You can see by the graph here on the sold properties in 2023 was 194 properties, right? We already surpassed that in January with closing 222. That just tells us that that first month of the year, we closed more than we did last year. We had probably equal amounts of weather. I'm not going to say that it was, we had a great no winter at all, but we had a pretty mild winter over in the Tri-Cities area. So we're waiting to watch what's going to happen in February and in March and see how the trend line is going to go. But we already saw pendings on the rise. So if those continue for a few months and then those properties close, we're going to see that trajectory of that arcing thing that you see on the slide here that shows the entire year, and our peak months being the summer months, and then it slows down towards winter, and then it just picks right back up. So we're watching that cycle as we go. 64 of the 222 were actually new construction homes. So again, we're sitting at least a quarter of the homes going in, a little over 25% of the homes going in new construction. So when we look at the sold price, it's obviously that it's going to follow a trend of the active and the pendings. And the sold price, of course, did exactly that, with last year the 601 being the average for new construction, 440 for resale total market, and then this year 493 for new construction, and then 431 for total market. So watching those numbers very closely, we expect to see that will continue to rise. One thing that the buyers are asking us is, I want to wait until the rates drop. And we're telling them, I don't know that I would recommend you do that. And there's a couple of reasons. When the rates drop, more buyers come onto the market. And when there's more buyers on the market, the inventory drops, right? It'll go from 879, quickly dropping and picking up more pended and then eventually sold. And then what happens when the inventory starts to drop more than that, then the prices start to go up because the sellers start to get more and there's less competition. They can drive that market the other way. So as you're a buyer out there right now, take advantage of that 6 and an 8. Take advantage of a buy down if you can get a negotiation to help with that aspect from a seller. The reason we're doing that is because we know we can control the rate. If it drops, we can control a refi in the future, right? We have great lenders that are partners with us. They can help you and navigate that. They can actually set up a plan to see that go in the future where you're tagged or alerted right away if the rates drop low enough. So these are important numbers to be watching. We forecast this way on a weekly basis just to keep you apprised of what's going on. We also look at it as an annual basis because we run our businesses based off of these kind of numbers, and you should make investment or you should make purchases based off of information that you gather. And at Community Real Estate Group, we want to supply that to our sellers and to our buyers so that we can be an information resource and come from an advisory consultant role first, and then put on our hats for negotiation, property searches, and added value to your transaction. So if you have questions about this market or future markets, please let us know. Getting back to the report, the average days on sold properties on the market obviously has been in that same category, 50 days for total market as it was for pendant, right? These are properties that were priced right, went under contract, and then sold. Keep in mind, the average market days spent in escrow is probably 37 days. 30 to 45 day escrows is really common. The number to start to watch, as we saw in 2007, when we hit the peak, we actually dropped down for a few years. This was, again, a forced market shift or a forced recession because they wanted to curb inflation, so they raised the rates to stop all of that. And it did, because now we don't get 20 and 30 offers on properties, and now we're not seeing $50,000 over list price. Lucky for you buyers out there that are looking, that you can actually go out and negotiate right now and get a pretty good, some good terms on that. And the 6% rate is a great rate. I mean, if you look at statistics, it's been a nice, healthy rate, and keeps things affordable. So we have great things to watch in this 2024 year. It's going to be exciting. We are here to help. Keep in mind, we represent buyers and sellers for commercial, for residential, for new construction, for land, whatever you're looking for in real estate. Even if it's for a rental, you can always call our agents over here at Community Real Estate Group. We hope you're subscribing to this channel. We hope you jump on our Facebook page, go to our website at communityrealestategroup.com, check out all the houses out there, and reach out to one of our professional buyer agents or seller agents to help you with your real estate needs. Thank you now.